Welcome to the deep dive. Today we're cutting straight to the heart of what's really moving in the crypto space.
Yeah, let's get into it.
We've got a fresh market snapshot, looks like from April 29th, 2025, and a whole stack of news headlines.
Right.
Our mission today, pretty simple. Get you up to speed on the critical trends, especially, what's happening with stablecoins.
And the impact of things like ETF launches, regulatory shifts.
Yeah.
It all ties together.
Exactly. We're looking at this market update for the big picture, and then we'll drill down into these specific events.
See how they connect, what the underlying forces are.
Okay, so let's jump into this snapshot first. Global crypto market, hovering just shy of $3 trillion. It's at $2.95 trillion right now. And nudging upwards, but only just 0.10%. Not a huge move. What I found interesting, though, is the Bitcoin Fear and Greed Index. It's sitting smack in the middle, neutral, 54.
Yeah, neutral. What do you make of that?
Well, it suggests the market's kind of holding its breath, doesn't it?
Perhaps waiting for a clearer signal, yeah. Being so close to that $3 trillion mark.
That could be a trigger.
Could definitely act as a psychological level, maybe trigger more movement if the right catalyst, emerges.
And speaking of potential triggers, or maybe fuel, the report highlights increased stablecoin volume.
Ah, okay. The dry powder argument.
Exactly. The thinking is if this keeps rising, it might mean more capital is just sitting there ready to jump into other cryptos.
It's a classic indicator people watch. Increased stablecoin holdings often mean traders are positioning themselves.
Gearing up for opportunities.
Potentially. It's like having cash ready in your brokerage account, waiting to deploy when the moment feels right.
But we don't know where it'll go or if it definitely will.
No, that remains to be seen, but it's definitely a trend worth keeping an eye on.
All right, let's dive into our first big topic then, stablecoins. Our source poses this really interesting question. Are they a safe harbor, in the often stormy crypto seas, or are they actually leading us towards more centralized control?
That's the crux of it, isn't it? Two very different ways to look at them.
Feels like it.
There are definitely two sides. On one hand, that price stability is a huge draw for everyday transactions, hedging against volatility.
Yeah, makes sense.
But how they work, that brings up these big questions about decentralization.
Right. Case in point. This partnership between Mastercard and OKX?
Okay, seen headlines on that.
They're launching a physical card linked to stablecoins. So you could potentially spend stablecoins, like in the real world.
Just like fiat currency. Wow.
What are the upsides and downsides here for the banks, the card networks, and for us, the users?
Well, it's a pretty significant step, bridging traditional finance and crypto.
Huge.
For users, the upside. Convenience, maybe lower fees in some cases, but for Mastercard,
It's strategic.
totally. It's not just about offering a new payment option. It's about staying relevant if stablecoins start cutting out the middlemen, banks and card networks.
So they're trying to get ahead of it
Right.
or be part of it.
Both, probably. For you, the listener, this could mean faster settlements, maybe lower fees down the line.
That's always a but.
But it does raise questions about data privacy control within these more centralized systems.
And it's not just OKX, right? MasterCard's working with others too.
Yeah, the source mentions Circle and Paxos for merchant settlements in USDC and USDP.
Plus MetaMask, Kraken, Binance, Anchor.
They're really spreading their bets, going all in on stablecoins, it seems.
It's a clear strategy then. Integrate stablecoins into their existing world.
Exactly. It's partly defensive against disruption, but also embracing what looks like the future of payments.
Okay, sticking with payments, Stripe's making moves too.
Right, another giant.
They're piloting a stablecoin payment product, initially for companies outside the US, UK, and Europe.
Interesting geographical focus.
And apparently, get this has been in the works for over a decade.
A decade. Wow, that shows the complexity, doesn't it? Technologically, regulatory.
So why focus on those regions first? Easier regulations.
That's a likely reason. Maybe aiming for a smoother launch, gather real-world data before tackling the bigger, maybe trickier markets.
And this comes after Stripe bought Bridge, which is described as a swift alternative for cross-border stuff.
Yeah, that acquisition really signals their ambition, building a new architecture for international payment.
And stablecoins fit into that how?
They could be crucial. A digital, borderless way to exchange value, potentially faster and cheaper than the old ways.
And there's big money projected here, right? The stablecoin market.
Could reach $3.7 trillion by 2030, according to one projection mentioned. Huge potential. That's what Stripe and others are seeing.
Okay, but this brings us right back to that core question from our source.
Do these developments align with the whole ethos of open blockchain?
Exactly. They lay out 6 pillars: open source, permissionless, borderless, neutral, censorship-resistant, and publicly verifiable.
Let's break that down. How do stablecoins stack up?
Okay, open source. The source argues, well, the underlying blockchains, yeah, they might be open.
Like Ethereum or Solana.
Right. But the stablecoin itself, control rests with the issuer. They can make changes.
That's a key point. You can see the transactions usually, but the rules of the stablecoin, the code governing it, proprietary, not truly open for anyone to modify or build upon in the same way.
Okay. Next, permissionless. Generally, you don't need permission to just hold or send stablecoins, do you?
For basic use, largely true. But the source flags KYC concerns.
Know your customer. Identity checks.
Yeah, especially with things like the Mastercard link or potentially Ripple stablecoin. These requirements add a permissioned layer, right? Not everyone can just access and use them freely in those contexts.
Got it. Borderless. That seems like a clear win.
Agreed. Like other cryptos, they can fly across the globe pretty easily. Digital nature makes them inherently borderless.
Neutral. This was framed around user experience. $1 stablecoin is worth $1 wherever you are, mostly.
From the user's viewpoint, the goal is consistency, yes. But underlying control, regulation, that can vary wildly by country.
Which could affect neutrality down the line.
Potentially, yeah. It's not perfectly neutral in practice everywhere, maybe.
Okay, now the big one. Censorship resistant. The source gives this a strong no.
Oof, why?
Sites tether openly saying they can and will freeze funds.
They have done it, yeah.
And upcoming MiCA regulations in Europe will likely force USDC to do similar things. Issuers can block transactions.
Exactly. That ability to freeze assets, block transactions, it directly contradicts that core crypto principle of censorship resistance.
It's a trade-off, isn't it? Stability for control.
That's often how it plays out with centralized stablecoins. Regulations are increasingly demanding this control too. So you get the familiar dollar peg, but you lose that uncensorable quality.
Last pillar.
Yeah.
Publicly verifiable.
Transactions are on public blockchains, so...
So issuers can make them public, but it's their choice how transparent they are.
Right. The technology allows it, but it's not guaranteed or enforced by the system itself, like, say, Bitcoin transactions are. Depends on the issuer's policy.
So the source's main argument becomes pretty clear.
What's the takeaway?
Stablecoin issuers, they're basically becoming the new banks.
Replacing them, in a way.
Yeah, providing digital fiat, but with a similar kind of centralized oversight and control.
That's a critical insight. They use the tech, but maybe not the full philosophy. Great usability, stability, but challenges those core decentralized ideals.
They only partially align, as you said.
Precisely.
The source also briefly touched on algorithmic stablecoins. Remember the hype?
Oh, yeah. Then Luna happened.
Right. The collapse really put a damper on things, but the source suggests AI.
Artificial intelligence. To make better algos.
Yeah, maybe AI could create new, more robust models. Seems like a real long shot right now there, doesn't it?
Luna definitely showed the risks. Relying purely on code to hold a peg is tricky. But AI is evolving fast. Maybe future breakthroughs could lead to more resilient designs. It's high risk, high reward for sure. Something to watch, maybe from distance for now.
Okay, let's shift gears. ETFs. Momentum building here.
What's new?
Ripple's XRP ETF. It's launched in Brazil.
Oh, wow. Okay. The first XRP ETF anywhere.
That's what the source says. Trading under XRPH1 on the Brazilian stock exchange.
That is significant. What does it mean?
Well, it gives investors in Brazil regulated access to XRP through a normal stock exchange account.
Lowers the barrier to entry, provides legitimacy in that market. Big deal for XRP there.
And this Brazil launch, it's fueling speculation about a U.S. version, right?
Naturally. People are watching the SEC leadership change, the perceived pro-crypto stance of the Trump administration.
Thinking maybe the door's opening.
Yeah, it's to the narrative, yeah. Plus, the launch of XRP futures on the Chicago Mercantile Exchange.
Another positive sign.
Indicates growing institutional interest. These things can sometimes pave the way for an ETF approval down the road. It's all part of the puzzle.
And there's talk of others too. Dogecoin, Solana ETFs, maybe later this year.
Q3, Q4 2025 is speculated. A Doge ETF.
Oh, that'd be interesting. Given the community.
Yeah, huge retail base. Could see a lot of speculative interest. Solana ETF would likely appeal more based on its tech and ecosystem growth. Different audiences.
It's diversifying beyond Bitcoin and Ether ETFs, potentially.
Slowly but surely, it seems.
One more Ripple point. They have their own stablecoin coming, RLUSD.
Right, Ripple USD.
So if they have an XRP ETF and a stablecoin, does that create internal competition? Or competition with Bitcoin even?
Interesting dynamic. XRP's goal is more cross-border settlement, a bridge currency.
And RLUSD.
That's a direct competitor to USDC, USDT, dollar-pegged stablecoins. So Ripple is kind of playing in both arenas, offers different tools within their ecosystem, might increase their overall footprint.
Okay, let's switch focus again. User experience and security. Critical stuff.
Always. What happened?
Coinbase had a bit of a hiccup, a UI error.
User interface. What kind?
It was mislabeling failed password attempts as failed two-step verification attempts.
Ouch. That sounds like it would freak people out.
Exactly. Users thought their 2FA was failing or being bypassed, causing unnecessary panic.
Yeah, that could definitely lead someone to think their account was under serious attack when it wasn't. Stressful.
Good news is Coinbase caught it and fixed it.
Okay, damage control done.
But it really highlights how vital UX is in crypto. These little glitches can seriously erode trust.
Absolutely. If using these platforms feels scary or confusing, mainstream adoption is just harder.
It seems like a small coding error, but in this high-stakes world,
It shows the complexity. Building secure and intuitive interfaces for finance is tough. Even minor bugs can have big psychological impacts.
True, and the source contrasts this, saying on a centralized exchange like Coinbase, they can fix it relatively quickly.
Whereas on a truly decentralized platform, fixing a UI bug might be more complex, or a protocol bug could be catastrophic. Different models, different risks.
Okay, let's journey over to Dubai and the Middle East. Some really interesting things happening there.
Dubai is always active in the tech space.
The Dubai Land Department, DLD, they're using AI artificial intelligence to boost transparency in real estate ads.
AI for property ads. How?
They have a platform monitoring the big listing sites, Property Finder, Bayut, Dubizzle. And since it launched, I think at GTEX last year, it's monitored over 279,000 ads. And get this, 29% were automatically modified by the AI for compliance or clarity.
Wow, that's a proactive use of AI. Pretty innovative.
Cleaning up the market automatically.
Enhancing trust, efficiency,
Yeah.
making the market more reliable. That's a smart application.
And it fits with their Smart Dubai Week stuff and this earlier project, Madmound.
The QR code thing for verifying ads.
Yeah, that one. It feels like a concerted push using tech to modernize.
Definitely. Dubai's clearly committed to digital tools for better governance, attracting investment.
How might this impact the region financially?
By creating a more transparent, regulated, tech-forward environment, they make themselves more attractive for all sorts of business, including digital assets. Positions them well.
Speaking of digital assets, BioOasis.
Exchange, yeah.
They've finally secured their full virtual asset service provider license in Dubai from VARI, the regulator.
They got the in-principle approval a while back, right? January.
Exactly. So this is the final green light.
What does this license let them do?
Offer regulated virtual asset custody services and staking.
Okay, so holding crypto for institutions, offering staking rewards.
Yes, specifically for institutional and qualified investors in the UAE under a proper regulatory umbrella.
That's key. Enhances confidence, legitimizes the space there. Big for BetOasis and for Dubai.
And BetOasis isn't new, right? They've been around since 2013.
Yeah, one of the older players in the region. They offer custody, wallets, staking, trading. Pretty comprehensive.
So this license just cements their position.
Absolutely. Their experience plus regulatory approval, that's attractive, especially for institutional money.
And VAR is issuing more licenses.
Seems so. Dubai is clearly pushing hard to become a major global hub for digital asset innovation and regulation. They're serious about it.
Okay, so let's try and bring this all together. What are the main threads?
Well, we've definitely seen that tension with stablecoins. Convenience versus centralization.
Yeah, integrating with TradFi, but maybe losing some of that blockchain purity.
Then the ETF landscape, it's getting broader, more diverse assets being considered beyond just Bitcoin.
Hints at wider acceptance.
Yes.
And user experience.
Still absolutely critical. Glitches erode trust fast.
And finally, Dubai. Really proactive on regulation, trying to foster the industry.
Yeah, dynamic mix of innovation, regulation, and those core decentralization debates shaping where crypto goes next.
So here's a final thought for you, our listener, to chew on.
Uh-huh.
Looking ahead, what are the real long-term consequences of these big centralized players getting so involved in crypto?
Will stablecoin convenience just win out over the original blockchain ideals?
Or will truly decentralized alternatives find a way to bridge that gap, offer both usability and decentralization?
And what about all this regulation like we see in Dubai? What does that increasing scrutiny really mean for global adoption, for innovation? Will it help or hinder?
Definitely gives you something to think about. Thanks for taking this deep dive with us.